What's up, YouTube? So I seen you guys vote out the order flow video. You guys want more order flow, so I'm gonna show you guys how I see order flow and what it should be if you're an ICT trader. So if you're struggling with order flow, you will have a way better understanding by the end of this video. We're also gonna go down to the AM session and show you guys some AM session models that you can use with order flow, and it's how you should be trading the model. For the people who say, "Oh, I understand," you haven't seen this part yet, so. But the first lesson is power of 3. So looking at the weekly here, you can see the week opens and it dips down into this order block, the wick high to wick low. So it's just about understanding sensitive areas, right? So without looking at the right side, look at the left. The week opens and it dips down into this level. Looking at the right side, you can see the daily opens and it dips down into this bullish fair value gap here and then runs higher. So yeah, the fair value gap worked on the daily, and on the weekly, yes, the power of 3, the open, low, high, close, it's working. It's panning out now. But how do you get on side with that? And how is that order flow? This is exactly how this is order flow. It's understanding like general concepts, like if you're bullish, down close candles are going to hold in an uptrend. So down close candle here, down close candle here, bullish for value gap here. Understanding what your PD arrays are really doing and what they actually are. That's the #1 key to order flow. So when I'm dropping down to the current session I'm trading, which is the AM session, I'm getting a grasp on where I'm at on higher time frames, because some people are like, "Oh, what's the time frame you use?" I use all of them. So on one of my monitors, I have this. I have the weekly to daily, and I'm literally just looking at sensitive areas where price is likely to react off of at a certain time of the day. And I'm going to show you guys that live here. But before I get into that, I'm going to show you guys more about order flow. So looking at that sell side liquidity from this high, you can see on the way down, up close candles were respected when price traded under them. So all the way down to sell side, you literally had a draw for how many days is this? Like you literally had a long-term bias down to here, knowing that these levels here are sensitive. You have a bullish fair value gap here. So when price is over here at this moment, right? And you're telling yourself like there's sell side liquidity here, there's an order block there, we should be bearish off of that down to here, right? And then you get something like this where you have a bullish fair value gap, you're bearish, you're in sensitive levels. This is a likely draw for price to get into for the next candle, and that's daily bias. It didn't get there, but it was a bearish day. Then we get through there. Now you can start looking at this low. Okay, now you have another fair value gap. Price could get in there and trade lower because we're now in a downtrend. And this sounds basic, but you'll see where I'm going with this. So price trades into that, then goes lower. Now you can start looking to attack this, and then maybe down to that low. Now you can look for previous day low and this low. Price trades up, which is fine. Then we trade lower. Right, so at this moment, the concept and the logic is still there. This is all order flow. You literally take this, you mark out that order block, and price should be bearish if we're going to continue going lower. So we trade up into that level, and that's good. That's draw right there. So when you arrive at this day, right, and you see you're under previous day low, you come back into the range, and now you have an order block. Now we should be turning bearish off that if we're actually bearish. You can see price trade straight through it. Now your eye should jump right at these highs that are equal, the remaining open portion of this, and then use the logic purge and revert. So we purge sell side and we can revert to buy side. So now you have an idea on how far price can go from where you're at. You can see price trades back down as an immediate rebalance here, and then runs higher. It's reaching into buy side, and now these are all giving you daily bias objectives. So now what? You're over here in this fair value gap, and price is very bullish. What are you thinking? It's the same logic. You have an open busy here, so you can either trade into that or you can trade out of that. So when you're an AM session trader like me, you don't really have that choice on being able to trade there and back, because sometimes it might get down there into London. You know, sometimes it might get down there overnight. Like, you don't really have that choice. But when you come at AM session every day, just know there's always going to be something open, because that's just how it was programmed, right? So look, you have a bullish fair value gap here, and you have some buy side over here with some nice open fair value gap right here. So you can see we trade into there. And the logic would be, if we're bullish, this should hold. So what does that mean? That means when you drop down into your lower time frames in the AM session, what is it showing you? Is it showing you signs it wants to hold? You know, now you can start to look at your 930 model. As you can see, price trades higher, comes back, hits this. This candle traded down into this order block. And it's the same logic. If we're bullish, this should hold until it gets to its draw, right? And we have a small daily high here and all this stuff up here. So that's the logic on why this inversion here would even hold. So this is where you drop down into your session. All right, so I'm going to get rid of that inversion level because it's not needed. But we're going to study this drop down into this here. So on the 4 hour, you can see we hit that higher time frame daily level. And on the hourly, you can see this is the new day. So the new day literally opened, dropped down, and hit that level. What does that mean for order flow? You're literally hitting a level that you're expecting to be bullish because of order flow reasons. Down close candles are going to support price in an uptrend. Bullish fair value gaps are going to support price in an uptrend. You literally see it here. You see it on the way down. You're going to see it on the way up. So this wick is what you're looking at on the hourly. And one thing to pay attention to is you see this open fair value gap up here. What you need to train your eyes to do is start seeing these start forming live. So we have an hourly open fair value gap up here that would be used as a target to trade into before actually getting to your higher time frame draws. So we're going to be looking to trade into that hourly SIBI here at a certain time of the day. So from the 4 hour to 1 hour, I'm dropping down to the 15 and 5 minute. So on the 15 minute, you can see the hourly CB is put in here, but we have a big gap down here like this. And then on the 5 minute, we have two fair value gaps. So we're going to cut price back to this moment here. All right, so I forgot to mention this in the video, but I'll mention it here now. This is to debunk everyone who thinks price is not an algorithm and 100% controlled and predetermined. Like, it's 100% predetermined, and I'm going to prove it. So this red line here, this is the daily order block. Like the bottom of the bottom. Like, yeah, you're not breaking this order block. Not today. So it uses an 815 news driver and shoots it straight down into that order block. Why? How is that random? It's not like it just flung up, flung down, left and right, straight here. Like, it's not random. You knew that was a level in the first place. The news driver brought you to that level. Just because you're not reading it the right way or can't see how it should be read doesn't mean it's random. So like the question would be, why didn't 8:15 news just run straight higher and take out your buy side? Like, why didn't it just do that if that's where the draw was going to go anyway, right? It wasn't the right time. It's going to use Trump speaking in the PM session to attack that buy side because there's PM session news. So when people are asking me, how do you use your economic calendar? How do you know what days not to trade and what days to trade? When I have PM session news, I don't trade my model because it's not going to be there. So what I'm going to show you what to do with these levels as I bar replay, it's going to make more sense on why I'm even looking for that and when order flow is now being invalidated. So you see how price is putting in those two fair value gaps I talk about in my mentorship? If you have two of them, you always want the first one to hold, because if you're truly bearish, it shouldn't be going back above that. So on the 5-minute, you have this fair value gap. On the 15-minute, you have yet to put in a fair value gap. But a general rule to understand where the high of this 15-minute candle is going to come in is this fair value gap here. Now you're getting a 15-minute fair value gap being put in here. At a time of day, we are likely to be bullish. So why would you be looking for longs? You're at a higher time frame level. You're expecting this whole move to the downside to be the daily wick. It's the whole point of power of 3. And this is where you start getting into that 1 minute. As you can see, price trades higher. And now it gives you a bullish fair value gap here on the 5-minute. As you guys can see the aftermath, it just runs higher. And that's the whole point of understanding order flow. And you can see current price now. Like, look at this fair value gap. If price wants to get above this high, this should hold. This is what forms high probability trades right here. For demonstration purposes, I'm gonna show you guys how to use order flow. It's, who cares about the money? It's the exercise, right? Bullish for value gap, higher time frame draws. We're bullish long term. And this will get you into taking trades, putting a stop down, and getting used to being in a trade with leverage. So now look, you have a 1 minute SIBI. Do you want that holding? No, we want that as an inversion. So what's our expectation? Should this hold price? Should it be supporting? No. It should trade through it. And if it does trade through it and close, that's going to tell me that this 5-minute fair value gap is good. If we continue rejecting off of this, that's not what you want to see. So when I'm reading price, right, this is the stuff I'm looking for. And these signatures happen all the time. I expected this fair value gap to be here. So could we disrespect it? Now I'm going to watch this down close candle here. To see if that can support price and propel it higher. Look at the 15-minute candle to the left. Look at how it opened, ran lower, and I'm buying the low of that. Okay, and the low of that is coming out to a 5-minute BISI. And then on the 1 minute, your confirmation entry would be this. You wouldn't buy anything down here if you weren't using the 5-minute. There's nothing for you to buy. Look at the hourly candle too. Just look at how it's flipping bullish. Like this is how I would call order flow and how I would use it and how I've been using it. But I just do it at certain times of the day. Like right now I'm in a macro in the PM session. My model's in the AM, but this is just a general order flow tip that I would give. And I hope this helps some people. If it did, drop a comment. But this is how I do it. I keep it very simple. It's either we're bullish or bearish on the time frame I'm looking at, off of a key level or not, from the higher time frame. And there goes the TP. So that's how I use order flow. I hope it helps some people understand a little bit how to do a top down coming into whatever time it is you're trading. And good luck, good trading, you guys. If you want more order flow videos like this, just let me know. So your eyes should be jumping here. You have a volume imbalance and a fair value gap. My eyes jumping here. I'm not looking up here right now. I'm looking for SMT right here. I want to see if ES is already down there. It's not. So NQ might get there first. ES might follow. And there it is. So on the left side, it's a 15-minute. I want to see on the 15, are we reaching for that low? And on the 1 minute, you're going to see how order flow works. That's an immediate rebalance with the likelihood of going lower. We have an opening range gap lower. So that's likely to get filled. General rule. So now we hit here, and it looks like this order block here now is putting in support. There's heavy SMT going on right now. I do believe both sides are getting taken still. That's not changing. ES just hanging out. NQ running higher. Watch this. Rush this right here. That's where my eyes going. It shouldn't really come back down. It should just stay at the top of this to the 50%. If we're going bullish. None of these are trade setups for me. Even if they were, I wouldn't take them. I'm gonna wait for something more high probability. And I'm saying that based on market conditions, not because this isn't a model that I would trade. I like fair value gaps. I like to get in at the order blocks. I don't like trading off an immediate rebalance. This one's good. This one was good. Because when this candle opened, it dropped down immediately, and it didn't take out the previous candle's high. It didn't take it out. So I love those setups right there. Not these ones. These ones. And you'll see them in your recordings and in hindsight you'll see them. But this was a live setup. You can see the mark is right here. See that? These are like guaranteed longs right there. Oh, there's the TP. So at this given moment, right, where price just opens and runs higher, a lot of people, okay, they'd go back up to their daily. They'd start looking. Like, what are you doing, bro? What are you doing? You'd be like this. They'd hit their hourly. They'd scroll all the way up. They'd start looking at what the hell price is doing. Like, where are you going? With no logic. That's not what you do. Once you hit your higher time frames, like your 4 hour, your daily, that's it. Those are your levels. If those levels got taken already, then where was your setup? Mine's was here. You don't re-look for another target because you can't relive that 9:30 again that day. That was it. There's only one. So the mindset you need to have right now is, what are we doing with the opening range gap under us, and what are we doing with this BISI? Because one side is already taken, and you have to submit to that. And if you don't get it, you don't get it. Womp, it is what it is. Start over for the next day. And remember, we have from 9:30 to 10 for this thing, if it wants to turn around, to turn around. And if it wants to go higher, well, that was it for me. Unless we're reaching up for this daily buy side, but we'll see about that.